You have it right. We'll be seeing more of Carter Worth's analysis about Tesla, but before we do, make sure to like. Many people tried to predict when we would sell Tesla and when we would buy it back down, but only one was able to do so. And follow him for more revolutionary Tesla stock news. At first, he confidently stated that Tesla stock was valued at about $240. The timing seemed ideal, but hold on tight because he quickly changed his tune and advised purchasing Tesla stock at about $110. His market forecast had us all intrigued, but just when we thought he had it all figured out, things started to go south. The stock experienced a significant decline as if in reaction to the previous quarter's exhilarating rise in a manner similar to a reciprocal equal and opposite action. After such setbacks, we found ourselves questioning the point of investing in Tesla. It felt like a struggle for the stock to recover, trapping investors' funds and leaving them wondering if they would ever climb higher. Now you might be wondering what the point of buying into Tesla after such a setback is. Trust me, you don't want to miss this. People have been buying the stock between $180 and $210 for the past 2 months only to see it drop to a daunting $165. Enter the illustrious chart. Despite the recent decline, according to Master Carter Worth, Tesla shares were about to shift into high gear. He claimed that despite the recent downturn, the stock had reached a historically low point that hadn't been reached since his IPO. The situation appeared to be so dire that it might even be advantageous to make a risky bet, and here's the kicker. Back in 2019, Carter Worth correctly predicted the bottom of Tesla's stock when it was just 13 cents per share. Can you believe that he had a knack for timing? Within a week, he doubled down on his position and purchased even more shares, and guess what? Tesla's stock started to soar, experiencing a stunning 15% increase as investors flocked back to the company. Now let's fast forward to the present. What does Carter Worth see in the charts now while he believes that the opportunity has arisen? Sure, some might argue that the window of opportunity has closed and that it is now too late to jump on the Tesla bandwagon. But here's the thing. Despite the stock's ups and downs, it has increased more than tenfold since 2019. Instead of falling into the trap of believing the opportunity is worthless, keep in mind that it's still 10 times higher than its modest beginnings. Slipped working remotely suggests striking a balance by taking some of the gains already achieved and leaving the remainder to benefit from potential future growth. Just keep in mind that the unpredictable nature of the market is demonstrated by this mind-bending journey through the ups and downs of Tesla stock. While short-term gains may tempt, the long-term perspective is what matters most. Don't be one of those people who looks back in 2030 and wonders, what if I had invested in Tesla instead? This approach prevents you from experiencing compounded returns, which results in much smaller gains than you could have achieved. This is one of the reasons why actively managed funds frequently underperform the market, because they cut their winners too soon, missing out on substantial potential gains. Tesla stock has long been Cathie Wood's favorite investment, and she is currently obsessed with it. An incredible 4.44 was returned by ARK Invest. The number 4 sounds like the word die in Chinese, and seeing triple death in a performance figure can be quite ominous. However, Cathie Wood has made insightful comments about Tesla, so I doubt my Taiwanese-Canadian wife would find it amusing. The stock increased by 741% during that time, but ARK Invest lost money. This outcome can be attributed to cutting winners too soon. In the stock market, anything is possible, but I've noticed over the years that when price targets are overly aggressive, they lose credibility. When I publish notes for hedge fund managers, pension plans, or families, they frequently question my optimism if I were to claim a stock could triple from its current price, which is why I aim for moderate price targets. Price targets that are beyond the realm of possibility, but still within the realm of possibility. Dan's imagination might have suggested $60, but that might just be an anomaly. This situation demonstrates why it's important not to place too much trust in analysts and hedge fund managers when it comes to price targets, because they frequently make adjustments to please their audience rather than based on objective reality. If you prefer a higher price target, they can accommodate you. If you'd rather see a lower price, they can adjust accordingly. Unfortunately, this approach prioritizes pleasing people over outperforming the market. To be clear, this isn't the case. If you've ever seen a stock double, triple, or even tenfold in a short period of time, it's simple to adopt this attitude of having lower expectations. Many people believe that the long-standing mystery of fossil diving is insurmountable because it has gone unsolved for so long, but let me assure you, my friends, that thinking in that way will only limit our potential. Let's get right to the heart of the matter when discussing Tesla's progress. Just because no one has ventured into the world of electric vehicles before doesn't mean they're impossible. Remember, groundbreaking ideas frequently emerge from defying the odds. It's crucial to determine whether we're focusing solely on the stock price or if we're also taking into account its margins and cost-cutting initiatives. Well, my friends, this recent sell-off is the opposite of what happened in the previous 2 years because we have a stock that no one seems to believe in, But analysts keep raising their price targets, and guess what? The stock keeps the flying expectations soaring. You see, it's all about dreams, aspirations, and the seemingly limitless potential they hold. However, once you start making cars, earning tangible profits, and establishing real margins, my dear managers, it's not the biotech and technology stocks that have to start making a profit. James is no longer sufficient. It is time to face reality. Now this is where it gets fascinating. Suppose we dare to trade it in for reality. In that case, there is a chance, perhaps even a strong possibility, that earnings might suffer temporarily. How do you ask? Well, Tesla may decide to strategically lower prices, which would have an impact on short-term profitability. But there's a twist. Although it may seem counterintuitive, my friends, with lower earnings, the stock's multiple might just skyrocket. However, let's switch gears for a moment and explore the world of dreams. Tesla, my dear investor, still has a lot of dreams to share with them. The Cybertruck, which is the pinnacle of futuristic driving, stands out as one that I fervently believe will come true. Investors may have lost some faith in fully self-driving capabilities, but that's exactly what works in our favor because there isn't an assigned valuation for that area of Tesla's business, which lowers the stock price and gives us the chance to buy more shares at a discount. However, while Elon Musk himself said on the most recent earnings call that it might be a multi-hundred-billion-dollar opportunity, granted it may be a long shot, but let's not completely rule it out because who knows? The valuation of Dojo alone might eventually rival Tesla's current worth. And speaking of dreams becoming reality, the next-generation vehicle is waiting, promising unmatched affordability and values. The journey through the highs and lows of Tesla stock has been nothing short of a roller coaster ride. From the bold predictions of Carter Worth to the wild price fluctuations, we've witnessed the unpredictable nature of the market, but amidst the uncertainty, there's a glimmer of hope. Carter Worth, the chart. Despite recent setbacks, Master sees potential for Tesla to shift into high gear. He thinks that the stock's historical low point may be a turning point for a remarkable growth. We appreciate your joining us on this exciting journey. Don't forget to like and subscribe to Only Pay for more Tesla stock news throughout the world of stocks. And as always, happy investing.